From our studios this week in Los Angeles and Jeddah, this is Green Tag Theme Park in 30. I'm Philip. I'm joined, as always, by my wonderful co-host, Scott Swenson of Scott Swenson Creative Development. On Green Tag, we break down the top theme park news each week and try and explain why it matters to professionals. And this week, we're going to talk about the United Airlines latest earnings and what it tells us about global travel. And as I mentioned, Scott is joining us from Saudi Arabia. Hello.
I was just going to say, isn't it unusual that we're talking about global travel and we're on opposite sides of the globe to do that? That's really interesting. Before we get started, Philip, I'm sorry, I'm going to do something personal here, and that's because I'm here teaching sessions for the General Entertainment Authority. I just finished a 3-day session in Riyadh. I had an amazing class of young professionals who are joining the entertainment industry, and I just wanted to. I'm hoping some of them are listening and will become regular listeners. But I just want to say how exciting it is to be in this industry in this country, because this is a very vibrant place for the theme park industry.
It's almost like I planned it that way. I don't know.
You are so smart. You're so smart. See, this is why Philip does all the heavy lifting and I just show up and talk.
But we love listening to you talk. That's you're the sex appeal.
Okay. Oh, we're in trouble. We are in trouble.
Our first story, of course, as I mentioned, is United and their recent earnings. United is rerouting amid economic uncertainty, and the new direction offers valuable insight for the global tourism industry. In a rare move during its last earnings call, United offered 2 earnings scenarios for 2025, basically a steady economy and a recession. In the stable scenario, they're forecasting 11.5 to 13.5 per share, but that drops to 7 to 9 per share in a recession scenario. United's approach is kind of setting expectations for investors. I think that's primarily why they did it, but it also reveals the carrier intends to see profit either way. And I think that's where this gets interesting, is how, if they're going to see profit in a stable or a recession, how are they able to do that? And I think the answer is diversification, which is going to allow them to ideally or hopefully make profit despite softening U.S. demand. So management there at United, they argued that the carrier's international network, their premium upsell, and their tech investments like Starlink and upgraded cabins give it a durable cost and revenue edge even as domestic demand cools down. And this is kind of backed up, their Q1 2025 release backed that up because they had the best first quarter in 5 years. But despite all of that, United is still pulling 4 points of domestic capacity in Q3 to stay ahead of soft spots while pausing most of their upgauging. Upgauging is when they take old carriers and kind of like upgrade them into new gauging. So they're pausing upgauging and they're reducing their capacity domestically. So in regards to the upgrades, management is blaming OEM production delays, which of course is still has to do with supply chains that we've been talking about for years. But in sum, U.S. outbound leisure and premium travel carry momentum. So like people leaving the U.S. outbound travel and then premium travel is what's kind of carrying them to be able to still sustain some profitability. However, inbound visitor numbers and domestic trips are wobbly. So that's the big view. We can go through each point and kind of talk about what it means for our industry and extrapolate that. There's also some very interesting travel trends when you look at how their numbers are evolving and where they're cutting and removing lines, which we can talk about after this. But first, I think domestic slowdown. I mean, that's the biggest thing, right? It's 4% domestic capacity they're reducing from Q3 onward. So I think the question here is, should regional parks brace for that softer visitation, or, because essentially that's trips around the U.S., right?
Well, and here's the thing that I think is interesting to me, because we talk about how can they show a profit, whether it's a strong market or a recession. Well, it's because it's an airline. Airlines can change quickly. They can reroute. They can cancel flights. Trust me, I've been on several.
Yeah.
They can cancel flights. They can reroute flights. They can change itineraries at a moment's notice. And this is one of the things that has been very, very common in some of the smaller airlines. Things like, the more budget-friendly airlines. Things like Allegiant. Things like Spirit. I have one client where I have to take Allegiant simply because it's the only direct flight I can get from Tampa to their airport, and both times I've traveled, the last 2 times I've traveled, the flight has been canceled. and rescheduled, and I had to change my plans and da. So basically, what they're doing is when they don't have a full flight, they cancel it. The same is true here, and I'm not saying that's exactly what United is planning on doing, but they certainly can readjust their schedule quickly,
Well,
and they're
yeah,
very fluid. They're very
I think they're
fluid.
doing both. I think to your point, they're again, I mean, they're never going to admit, on a call that they're going to, be canceling whatever cancel rates
Right.
or delay rates. But they are actually, I think, again, they're setting expectations, I think, for the consumers and for the stockholders by saying, look, we're reducing our domestic capacity. That means that they're like telling you ahead of time, we're going to be reducing the amount of flights that we're doing in the US due to softening demand or whatever. But to your point, that means that, again, especially for regional parks, I think, or regional locations, this impacts more because there's always going to be a flight to Orlando
Mhm.
and Vegas and Los
Mhm.
Angeles, but
Mhm.
there's going to be less of those regional ones. And, again, airlines fight over regional routes. And if they're trimming regional routes, that means it's going to be harder to get around. And then it's going to also be harder to put it back up. Like basically they're retooling. They're saying we're doing less domestic travel and we're going to shift to more outbound US travel because US people want to go outbound. So like people want to leave the US and vacation elsewhere if they can afford it, and those are the people that can go. Is the ones that are less affected by any economic downturn, so higher income brackets, they want to go to Europe or they want to go to Latin America, they want to go to Asia, and then they have World Expo Asia, so people want to leave here and do less domestic travel. So I think they're already saying that they're just shifting all of their trips. But that is, again, going to have trickle down effects for the regional attractions that
Right.
kind of rely on that.
And the very first thing I would suggest for those regional attractions is kind of what Busch Gardens did years and years ago, and that is make sure that you do have a strong local base. Uh,
Yep.
and one of the things that you can do for that particular to elevate that particular market is something that Philip and I are both very, very passionate about is continue to do seasonal events, continue
Yep.
to do multiple reasons for locals to visit your park. So it's not just, oh, we'll go to Fun Park World once this summer, or we'll go 4 times in the year because we've got 4 different reasons to go. So the very first thing I would say is really shore up. It's again, it's just like 9/11. Shore up your locals, shore up
Yep.
your local market, so that when your even your domestic but still tourist market starts to drop off, you'll still be strong enough to keep your parks going. One of the things that is happening just in general is the parks don't know what to do right now. And they're holding off on making decisions to change. The only one who's really moving forward is Universal. And I think that's because they've already pulled the trigger and they can't catch the bullet again. So, but the smaller parks, the parks with not quite so deep pockets, have great ideas. And I know that because I've got quite a few RFPs out there that are just sort of dangling and hanging because they're not quite sure they're comfortable to move forward with
Yep.
them. And
Yep.
I think this is exactly the reason why, or one of the reasons, one of the contributing factors. Yes, the economy is probably a larger factor, but tourism is, air travel to get there. You can build the greatest thing in the world, and if people can't get there to see it, you can't earn your money
Right.
back. So
Well, yeah.
build up that local, even your past member base. Build up as much of that local market as you possibly can and give your locals multiple reasons to visit your park. So it's not just, I'm going to go once this year, make it that give them reasons to go multiple times.
Going off of exactly what you said about the locals, I think we talked about that last time when we talked about diversification. And essentially, if you're looking at softening demand at all, you need to look at more, appealing to your locals. And on exactly what you just said about that, there's more in here that we can take away as well. It's the whole barbell demand that they mentioned in the earnings call. So the premium cabin revenue was up 9%, but basic economy was also up 7%, meaning that there's like a barbell, right? So like essentially it's like there's an increase in the cheapest ticket, the like basic, economy. There's also though an increase in people wanting to fly premium. So we have this barbell effect happening. I think that's exactly also something that you could take and extrapolate into serving local people. There's going to be, again, the family, like we talked about with Disney, good, better, best. There's going to be the family that just needs the fries and chicken nuggets because they don't want to pay a higher price and their kids don't care. And then there's going to be, again, the premium or adult only or whatever stuff that you've mentioned over the years that
Mhm.
falls into that camp. And I think looking at your offerings as well and making sure that you're hitting the good, better, best or the barbell model would also be good for this.
Yeah, and that actually makes total sense because in an uncertain economy or even a waning economy, it's not going to impact the premium. They're still going to go for the premium experience. What's going to happen is the lower end is going to not do the mid range because that is extravagant for them.
Yep, exactly.
So what they will do is they will do the lowest possible um,
Yep,
the lowest possible pricing for food or whatever.
yep,
And it's one of those things. Actually, the session that I taught in Riyadh was all about customer experience and customer service. And one of the things we talked about was offering multiple levels of experiences. They wanted to talk a lot about VIP experiences, which is huge here in
yep.
the Saudi market. And so I made it very clear that you have to have a multi-tiered experience or make multi-tiered offerings. And I think this is a perfect example of why that will work and how that will benefit parks if they're not getting the tourism, even the domestic tourism.
Yep.
And look at
Uh,
those things. If international tourism is up, make certain that you're doing things that international tourists understand. One of the things that if you don't travel much out of the country, especially if you don't travel to countries where the written language is different, there are times where and I'm not dumb and I don't try to be forceful about it, but there are times that I just simply don't understand what's going on. So make certain that if you want to capture that international market, that you make the international guests feel welcome and things that they can understand. And I'm not saying you have to translate everything into every single language that you can think of, but even down to your signage, even down to your menus, make sure that they are as visual as possible. And most parks do that anyway. But I just want to make sure that if we're going to get if incoming international tourism is on the rise,
it's
make
not.
certain.
Or just to clarify,
Oh,
it's the other way. It's outbound.
sorry. You're right. You're right.
Yeah,
You're right. I'm sorry.
yeah.
I misspoke.
But that would be for if people were. I think your point still holds true for anybody that works in a multinational brand. I mean, look at every
Yes.
time I go to Disney. That's what. So my friends are always like. I have one friend that is I'm looking to go to IAPA Asia coming up here in June, and of course I'm going to go to Disney because, haha, it's Philip. I'm going to go to Disney when I'm in China, and of course my friend's like, well, how are you going to pay for anything without a WeChat wallet, and how are you going to navigate it and all this stuff? And I'm like, look, it's Disney. And even in the middle of Shanghai, I've been there before, and it's the easiest place to traverse. And everybody, if they can't speak English, Disney gives them little translation devices that they know how to use. I mean, like they have made it so that you can seamlessly get into Shanghai Disneyland and you can experience and pay for everything. And it's actually more navigatable than the city itself, or even in many ways the airport. And I think
Right.
that's what you're saying is that Disney is like, look, we want to make sure we're open to any, it doesn't have to be Americans, but any Europeans that speak English or any other country that speaks English and can come in and enjoy the park.
Yeah, you're absolutely right. I misspoke about the incoming transit. Sorry, I'm still on an 8-hour difference, and my brain hasn't caught up. But the same is true, as you say. The same is true for our international listeners. Make sure that you are as welcoming or as prepared to be as welcoming as possible. To people who may not speak the language, because that international tourism can benefit you coming from the U.S. and especially the high end.
Well, and especially we talked about this last week as well when we talked about, or I don't know when we talked about it, but at some point, when we talked about the parks and we talked about Universal UK and all that, and this is again backing up that because what you're seeing is an increase in demand to leave the US and go other places, right? And so again, it's backing up why Universal is moving into that market, because you're seeing people want to vacation more into these markets. And then to your point, those markets are going to have to be able to deal with that. And I didn't put this story in the show notes, but Hong Kong this week, it gave a conference and they went out actually to Hong Kong Disneyland went to Singapore and they gave a conference about their 20th anniversary. And the whole pitch was how they are welcoming to everybody, people from all countries and from all languages, and just really encouraging people from all the neighboring countries to visit. And the Hong Kong Travel Authority talked about how half the world's population lived within a few hours plane of Hong Kong Disneyland, and
Mhm.
how they were really trying to make sure that, just exactly what you just said, like we're going to be able to handle multiple languages and make it seamless for people to arrive and to enjoy Disneyland in Hong Kong. And again, I think when people are reading the tea leaves here, they're like, well, people are fleeing the US effectively. They don't want to vacation as much in the US, and they're going to vacation other places. They can account for that and start to prepare for that demand. But
And
also,
and American tourists are probably the most difficult to
yeah,
prepare for
yeah,
because again, the US being so large, many people are not used to traveling outside of the country.
yep,
And
yep.
when they do and they have to do things and they have to understand things differently, it is difficult for them. They get frustrated. And so it's a situation where it's a great opportunity. If you can be the park, if you can be the international park outside of the US, especially if you're in a non-English speaking country, and especially if you're in a country where, once again, it is not the same alphabet. It is amazing the difference. People here, people here in Saudi, for example, the vast majority, almost everyone speaks enough English to communicate. All of the signage is done in both languages in Riyadh, but here in Jeddah, I would say maybe 50% of the signage is in both languages. So
Yep,
it is a bit more difficult to make simple decisions when you're not exactly certain what's being offered. So
yep.
if you can make sure that those people coming to your park can understand what you're offering, you'll sell more.
Well, the two other takeaways here that might be kind of parallel what we've been struggling with, the upgauging, which I talked about. So in 2025, they had planned on receiving 100 deliveries to upgauge their. So that again, receiving that means receiving like new plane bodies so they can upgrade
Mhm.
flights on them. So that's been cut from 100 to 71 jets, just because of hardware delays. And I think that again is a parallel that we're seeing in the attractions space, which we've talked about now. So before, when we started the show years back, we were talking about supply chain delays and those issues. And now it's more like tariff delays. And so what we're seeing even recently, this past few weeks, is that people are just not importing because they're unsure about the tariff and bringing stuff in. So people are just leaving, not shipping, or just, I don't know. Our importer at Gantum has verified this, that all the clients they work with are just leaving their stuff somewhere, whatever dock it's at. They're not even bothering to bring it to the US. And what does that do? If stuff isn't coming to the US, that means that there's less supply, which means that the prices generally go up. That also means that if there's less supply, then you're not able necessarily to get them as fast. And so that's going to, again, same thing with the airline, but you're seeing here, you see it in real time, like going from 100 to 71. That's I mean, that's a lot. And if you can then trickle that down to the theme park space, maybe you're not going to be able to get enough steel or get enough parts to get this done in time or do that, which goes back to what you said, because something that we can control is the seasonal events, because we can staff them from people that live in the country.
Yep. Yep.
um, Also, let's see, the tech thing here. That was also interesting. So United has been talking about how they are expecting Starlink to roll out, and 85% of digital check-ins cite it as loyalty drivers. So essentially, they're pointing at those two trends. So one is that they're trying to bring Starlink to most of their fleet for free, to add the free Wi-Fi. And second, that most of the 85% of their check-ins are loyalty drivers. So that is another trend also we've seen, right? The whole idea of connectivity. And when we talked about that with Freddie, gave his talk at the IAPA Expo about the line, between offering connectivity at your park and not wanting them to be too distracted. But of course, here at Disney, you have to do everything on your app, at Disneyland, but then the loyalty driver as well. I mean, look at the season pass holders and that kind of thing, and how important those programs are. So I think there's also some learnings there. Trying to
Yeah.
figure out your line for your connectivity at your park, but then also remembering to acknowledge and reward your reward program members.
Yeah, anytime you can make the guest experience simpler for your target audience, and that's
Ideally.
the important thing. Simpler for your target audience. It's gonna be a win-win scenario.
So, looking at the kind of reading the tea leaves here for the overall travel, we look at domestic deceleration but not collapse. I think that's important. Is that households below the top quartile are pulling back, and airlines are seeing weaker off-peak yields and are trimming their flights, which we talked about that. But also understanding the international stuff. So high-income U.S. residents are driving record demand to Europe and Asia Pacific specifically. And meanwhile, inbound foreign traffic is sputtering. So they're really trying to chase the money outbound. So you might see increased prices on the tight seating and increased prices on the outbound stuff, but then potentially some deals coming in, but the demand isn't there for that. And then domestic deceleration, but not collapse. It's still there. Interesting. They did cite an increase in interest to Latin America, which they're, I guess, extrapolating to be that traffic there is heavy for sun seekers and people that are less dollar sensitive than long haul Europe trips because it's closer, right? So, and in some cases, it could be cheaper than going to. I even did when I priced out that trip to Mexico City for IAPA. It was cheaper actually than going to Orlando from where I'm at. So, I think you're going to see that, which could be a theme that some people could work into it. But I think overall, the bottom line for all this is that within the US, the growth is cooling, but it's not dead. And outside the US, travelers remain eager to roam, while foreigners are visiting America less. So this is the big trends and all that. So, yeah, that it.
Sounds like we've covered it.
Okay, we need to get to this next story because I know that everybody will. So we finally heard this week. So United just showed how airlines can pivot capacity to hedge a downturn, which we just talked about. But remember back in February, we did an episode, I think it was February 2nd or 9th in that range, where we wondered who was going to step in to fill the talent void that after Merlin had laid off hundreds of performers. And we did the episode where we talked about how Merlin had laid off over 200 in Florida and then over 100 in California. And then they were looking at cutting all over the world. And we're like, if they're going to cut all this talent, but they're still going to maintain their live shows, which they said they were going to do, how are they going to do it? And back then we said, probably the only person that could do that is RWS. And this week, they confirmed that yes, RWS is going to do that. Merlin just crowned RWS Global its preferred entertainment partner, which is what they're calling it, for 6 flagship resorts, promising 100+ new shows in 2025. And according to the press release, the partnership will complement Merlin's core in-house entertainment offering, allowing the resorts to scale up to deliver brand and guest experiences throughout the year, including during seasonal special events. RWS Global is developing more than 100 experiences at these Merlin resorts in 2025 alone, building upon beloved shows with exciting new entertainment offerings for all to enjoy and experience. Guests can expect new, innovative productions, immersive storytelling, and exciting new shows, all designed to bring even more magic to the guest experience. But is it really going to be magic? Is this really going to save money like they had alleged it was going to do, or is this just kind of papering over it? I think the only argument you could make for this is that Merlin is outsourcing this expertise in order to reorient their team and focus on what they think they do well, which I guess is like IP or running hotels or doing stuff that isn't entertainment, and so they're trying to outsource it. But I don't know.
So their internal team, their internal entertainment team, has been going through some pretty radical and major shifts as well. I mean, what's getting the big news is RWS, and congratulations to RWS for getting this. Like I said, we said it before, they're the only company that's really large enough to be able to handle it, and so it'll be very good for them. And again, full transparency, I have done work for RWS in the past, and I still continue to work with a lot of my colleagues and friends are RWS employees. But I they're also restructuring the people that are internal. They're
Yep.
also shifting them around, moving them into higher positions, moving them into different positions, more global positions. It's a little bit of, and this is going to sound negative, but I don't mean it to. It's a little bit of a homogenization or a standardization across the board,
Yep.
which will result in some financial gain or some financial savings. Maybe not gain, but savings. And you've heard me say many, many times, whenever any organization chooses to outsource in this regard, it is a usually, based on my experience, it has been a temporary scenario where they will outsource for a while. They will do, a few years later, the pendulum will swing back. They'll take
Yep.
everything back in house because they're like, why are we spending all this money out here when we could take it all inside? Um, but I think that at this moment, I think it is Merlin saying, gosh, Universal's exploding all over the world right now, and it coming into the UK backyard, and gosh, what are we going to do to help offset some of our costs so that we can still remain competitive and yet still keep the product up? And I think RWS, like I said, I think RWS is the only company, the only external entertainment provider that I know of that could actually handle something of this magnitude. Now, is it is it savings on paper or is it savings in reality? That I don't know. Does it mean that we're going to see? Does it mean that we're going to see the same five shows at all? 100 new shows, but is that the same five shows in 20 different locations? That I don't know.
Exactly. Exactly.
But again,
Exactly.
if that is the kind of standardization that's going to create savings for the park, you can't really fault that. It's
Yep.
because let's be honest, there are very few people who are going to go to every single Legoland park in the world.
Correct. Correct. Well, that's what I was thinking. It's like you could argue that basically, I mean, basically, if they're like, we don't have the capacity to do this, which is what we talked about last time. But
Mhm.
if Merlin is like, we don't have the capacity to do this, and we need to focus on, figuring out a way to remain competitive when we have all this stuff coming in,
Mhm.
but they know that cutting live entertainment would upset people, so that could be in that case, it could be a good idea where if you can't do it on your if you know you can't do it and you know that you need to take the team you do have and put them on other projects like figuring out new IP stuff or figuring out other strategic elements, and they can't worry about this, then in that vein it would make sense to just offshore it. And like you said, no one's going to go to all the parks, so they say 100 new shows, but like that's I don't think that's actually possible. That might be that could
Well,
be like
but once
semantics.
again, 100 new shows, but they can be the same script in
Yep.
20 parks, and
Yep.
those are still the same script in 20 parks. That's 20 new shows, in essence. And the other thing too is if these scripts and I think it. I'm guessing again. I don't have any insider information, but I'm guessing that RWS is smart enough because they've done this kind of. Well, they've done this with other intellectual properties, where they will install the same intellectual property in multiple locations or in
Yep.
multiple ways.
Yep.
And I think they're smart enough to recognize they do need to have a little bit of wiggle room so that it can be tweaked or polished for each different location. But it's
Yep.
still the same core script, so or the same core concept idea, and that saves a huge amount of money. I just recently did a project, as I've talked about on the show, for SeaWorld, where I wrote the sea lion and otter presentation for the 3 U.S. parks. And in writing and directing it, we had to do a lot of customization because with animal shows, you have different animals in each park. You have different animals that can do different behaviors in each park. But we still did the same basic um, script, same basic concept, but it is still a very unique experience in each of the 3 parks because they've got different animals, they've got different trainer strengths and
Yep.
weaknesses, they've got different theaters, they've got different technical aspects that are part of those theaters. So, like I said, I think RWS is the right company for the job. Is it going to be really 100 brand new shows? I doubt that they're going to be 100 unique individual shows, but they will be brand new for the parks and for the locations. So kudos to them, and I'm hoping that they can make it all work and keep Merlin in its strength position, or the position it currently has within the entertainment industry. I hope.
Yeah.
See.
Yeah, and we got to go. But I just also worry about the labor optics, which we talked about in the last episode. But essentially, you went from having these as team members, and then you are basically firing all of them, and then trying to rehire them all back as gig workers minus benefits under a different company. And like we talked about last time, that creates a friction and a bad will, and effectively, the only performers you're going to get back are the ones you don't want, because the good performers went somewhere else.
That's not always true. That's not always true, because I've been through this experiment, and we will dig into this deeper in Unhinged, because I really want to talk about this. So we'll talk about this in Unhinged, which, by the way, is our Patreon supported paywall, where we throw all the gloves off, and Philip and I fight and scream and swear and say all kinds of nasty things. But that's not this show, because this show's over. Guys, thank you again so much for joining us this week for Green Tag Theme Park in 30. My name is Scott Swenson, and as always, my wonderful co-host is Mr. Philip Hernandez. We'll see you all next week.